Hi and welcome back to 𝗕𝗘𝗪𝗏𝗂. Today guys, we're going to be taking a look at Harmony Protocol and specifically the price action of one coin. We're going to be taking a look at the price actions because we had quite a bit of turbulence yesterday, but we have recovered well and we want to kind of review whether or not this is something that we're going to see continue or whether or not more to the downside is likely to occur. As we get into this video, if you find it useful and informative, hit the like button. I really appreciate that. If you are new, make sure you subscribe, tap the bell, select all notifications, and in doing so we'll be able to stay up to date with absolutely everything that we do here. Right, with that said, done out of the way, let's jump into this TA here for Harmony. We're going to start with the weekly chart as we usually would do to indicate that the structure from the bigger kind of macro point of view is still intact and everything is actually working pretty well for Harmony here. Everything started back in March of 2020, as we usually would say. And we got these clear 5 impulse waves to the upside. The first one kind of peaked out up here in August. We had the correction wave 2, bringing us down to some low areas by December 2020. We then went into the nice wave 3, which was very, very steep. And again, this kind of peaked out up in March of 2021. So from March 2020 to March 2021, Harmony had gained 18,905% in gains. So pretty good there. We then went into the correction of our 4th wave. Again, this was quite steep because wave 2 was quite flat, and here we actually went down into the accumulation zone before we went into our 5th wave to the upside. This gain caught people off guard a little bit, specifically if they were buying at the top of March 2021. As we went down to these lower areas during June and July of 2021. Okay, so coming right down nice and low, but we were testing our support of our trend line to the upside. So we have this trend line started just before we actually had the crash in March 2020, tested this with the peak of wave 1, broke through it halfway through wave 3, back testing several times during wave 4, and we are now gaining quite a bit of traction. Now, it was unfortunate that we had the pullback yesterday, but Harmony 1 has recovered very, very well. And we're going to get into that on the smaller time frames. But overall, this structure is still intact and there's very little to worry about at this point in time. There is still about another 500% gains from our current position up to our high area of about 79 cents. And I do have the 5th wave actually targeting $1, although technically that isn't indicated here. I do think that's a psychological area that we might actually end up going for in the long run. So 79 cents is the Fibonacci 4.236 extension, and the dollar is where I like to think we might actually just push to under some better circumstances. With that being said, we can see that we're overbought on this weekly chart, and again, this is something that we talk about quite a bit because during wave 1 we were overbought for quite some time. We actually entered this in May of 2020, and we did not leave the overbought area until August of 2020. Same thing for wave 3. We entered in January of 2021. We had a small dip in the middle. This is the correction here that you see. And again, this kind of correction that we've seen most recently isn't too different to this one. And then we push up again into the overbought area until March of 2021. Okay, so again, we're up here for quite some time. So being up here right now, partway through this 5th wave to the upside, this actually is quite natural. And again, we can be sustained up here for quite some time. And these kind of natural pullbacks, they don't happen all that frequently, and they don't actually pull down your stochastic RSI because they happen very, very briefly, and they're a moment in time during one of those weeks. So again, we just sustain this kind of longevity being overbought. So let's jump down into our daily. This is where we start to actually review what's been going on with yesterday's candles. Obviously, yesterday we can see a significant pullback, but then recovery straight away. And today saw an interesting move. We actually pushed up the wick up to where we were previously on yesterday's highs before we actually had that crash from Bitcoin pulling things down. So you can see here that straight away they actually recovered incredibly well with Harmony, and we're still pushing to the upside right now. This daily chart had a bit of a blip yesterday when it got pulled down from the overbought area, but likewise, we can talk about being overbought on this daily chart for a very long time. So we're barely even kind of getting started here for Harmony. So things are starting to move quite nicely. Now, when we actually zoom out to the bigger picture, we did have this triangular wedge that has been forming from a downward trend and an upward trend. The upward trend line is the one that's been tracking since February of 2020 and has been held quite well. The downward trend is where we actually saw from the peak of 3, the bounce during wave 4, and we actually have invalidated this by pushing it through. So right now, this yellow box area was a key area for us. This was the 618-702-786 area of a Fibonacci retracement. Running from this high here, and I think this low down here, this indicated an interesting area that we wanted to get a closed candle above, preferably weekly. We're on track for that weekly closed candle above here. Now we have actually invalidated our downward trend. And if we, as long as we hold above this area, we should be doing okay. Right now, the resistance is coming in at 13.5, which is actually the 50% retracement zone from the third wave high and the fourth wave low. Okay, so those indicating that this is the 50% retracement zone that we're finding as resistance right now today, as we are in an interesting area on this stochastic RSI. That being said, we obviously have found resistance with those wicks just up at the 618 of the larger Fibonacci retracement zone. This again comes from that high of wave 3 and the low of wave 4, and this is the main battle area for Harmony. Getting a closed candle above the 786, coming in at anything above 18.6 cent would be the big bull signal that takes it to those next levels and starts to go into price discovery. For Harmony, again, we just take a look at these. We have 79 cent as our 4.236 extension, and again, that is something that we are thinking is likely to happen here in this cycle and towards the end of the year, beginning of next year as the bull run peaks out, and before we go into a bear market. So overall, everything here is looking pretty good and pretty tidy, and again, it's good to see that we've had such recovery here, and we have wicked above some of those key areas. Now, I will get into the hourly in a moment, but it's also good to see that downward trend being invalidated the way that it has done, and we have had a good recovery from yesterday's pullback. So let's jump down into our hourly. Okay, and here we can see, basically coming up to that resistance of the 618 quite clearly here for Harmony, getting the rejection as Bitcoin pulled back, bringing most of the altcoin market with it. And there were actually a couple of exceptions. I think whilst Bitcoin was pulling back, Fetch AI went up, for example, right? So there are a couple of exceptions, some altcoins that were performing well whilst Bitcoin was tanking, but the majority of altcoins actually just followed Bitcoin and just went down. We can also see that we had a good bounce to the upside, was rejected from this area here, pulled back, and then we broke through. So what we mean by this? Well, if we actually take hold of our, I'll take this one here, and we push this down to our low area here. This is a key area for us to be monitoring, because what you find is we had basically our rejection point. We pushed down, we found the bottom, and we bounced, right? And we actually bounced up to the 702, was rejected from the 702 before coming down just lower than our 382, although we did consolidate down on the 382, and then we broke up, and we actually pushed right up above our 786 area, and now we are just a little bit south of the 702, but this whole structure here is a very good structure, because now it's indicating that we are not looking for lower lows. In fact, we'll just set higher lows. Okay, so we had a low, we had a higher low, and then we'll look for a higher low, and then so forth. And we can already see the higher highs, although we are getting lower highs right now. And in the next little while, the anticipation here would be that we would actually push further higher, as we now continue to grow, and again push higher above the previous high. Okay, so we had this high, we had this high, we had this high, and then the next one should hopefully take us higher than we were before we actually had the crash. So structurally, actually looking at it from a Fibonacci point of view, knowing where we've actually been rejected from, where we've actually found support on, and knowing that our stochastic is already quite overbought here on this hourly chart, looking to kind of just pull back a little bit further and then grow it back to the upside. What we'll look for is basically a higher high than we've had over here. So anything a closed candle, preferably above the 12.5 cent area. And if we can keep it above our trend line, that would be fantastic as well, as we lower our stochastic and continue to the upside. So overall, the structure here is not indicating that we should be worrying about new lower lows and things like that. It was a flash attack, in my opinion, on what was going on with Bitcoin. And we've seen something similar that happened with XRP. Everyone was supposed to buy XRP on a specific day. Instead, a few select bad actors actually sold large volumes of XRP. And the same thing was happening for Bitcoin, right? Everyone was supposed to buy $30 worth of Bitcoin on the news of El Salvador, and instead a few bad actors dumped Bitcoin, right? And we can confirm these things a little bit further, right? We also can obviously take a look at the advice dashboard for Harmony. Nothing was indicated that something bad was going to happen, and the AI would have been pretty much all over this, and there was nothing being indicated, not even for Bitcoin. And again, I can go deeper than this, right? So we take a look at the advice.io for Harmony. Again, it's very good at an A2 rating. It has not fluctuated. The artificial intelligence says that fundamentally underlying data has nothing nothing to kind of be concerned with, and it is pretty much as is and always has been, and is doing very, very well from a data point of view. And we also take a look at the inflows on Glassnode for Bitcoin, right? Were we expecting this to happen? Other than the fact that, we've seen something similar with XRP, these are the inflows here, right, from the crash that we had back in May. This is what it was looking like when institution level people were dumping on the market. And we take a look at where the inflows were yesterday. Well, the inflows were all the way down here. There's a little bit of a growth today, and I think this is just around panicking and basically trying to see. Actually, the inflows yesterday were at a reasonably high level, but they're not as high as they have been previously, right? And again, this is not indicating that institutions were dumping on the market. This is actually more that there's a few bad actors that maybe have been accumulating some Bitcoin for some time here to just deliberately push the price down and liquidate some long positions and things like that. But there's not a huge amount of inflows. Now, they've either been building up their positions on these exchanges for quite some time, or they've been building up the positions elsewhere because it just again doesn't require to be kind of an exchange to kind of liquidate positions. But nonetheless, the inflows here are looking incredibly reasonable in comparison to where they have been previously, right? And again, that is just May. We actually take a look back at where things have been more previously. You can definitely see what it was like during March of 2020, right? And we know what that was looking like. And again, we can go right the way back into what these inflows were looking like during a bear market, right? We are incredibly low. The inflows are incredibly low. So again, I don't think we've got anything to really worry about from that kind of perspective just yet. And again, the stock to flow model on Bitcoin is in line with everything in our expectations. So again, I'm not overly concerned or worried about anything here. The artificial intelligence at advice.io is indicating no problems with Harmony. The Harmony charts definitely don't seem to be wanting to indicate new lower lows or anything like that. So right now, everything on Harmony is looking pretty good. But if we are ever in doubt, we do zoom out and we do pay attention to the bigger picture, because this is where we kind of see the main things going on, right? And we can see that everything structurally here is working for us, and we are continuing the move to the upside. These natural pullbacks, they happen all the time. And we can, of course, see these happening even during our third wave. We actually went up a bit here, and we actually had a pullback of 56% in the middle of our third wave to the upside, right? Shaking out a few retail investors. So a small pullback that we had yesterday actually was indicating us it's probably about a 38% move on Harmony from the top end of the day to the end of the day. So again, although it's a dojo candle right now, very indecisive in the market, technically speaking, the structure looks good, pretty much across most of those different timeframes. The advice.io dashboard indicates no problems with the underlying data. Bitcoin's exchange for inflows are not indicating a mass sell-off at any point. The stock to flow model is still intact. Overall, the market is very much structurally intact ahead of this kind of fifth wave bull run peak that we are looking for. It's definitely not indicating that there's an early bear market or anything like that. So guys, hopefully you have found this video useful and informative. If you have, hit the like button. I really do appreciate that. If you are new to the channel, do subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.